That's a diverse range of investments. It's great that you're considering different types of investments to diversify your portfolio. However, it's important to keep in mind that each type of investment comes with its own unique set of risks and rewards. For example, investing in a local business can be riskier than investing in a publicly traded company, as there may be less information available and the success of the business may be dependent on factors that are difficult to predict. On the other hand, investing in an established IT service company with a solid track record may be a more stable investment option. Similarly, investing in a YouTube channel may offer potential for high returns, but it may also be a risky investment as the success of the channel may be dependent on factors like the content creator's popularity and the platform's algorithms. Overall, it's important to do your due diligence before investing in any type of asset and to have a clear understanding of the risks involved. It may also be a good idea to diversify your portfolio across different asset classes and industries to minimize risk and maximize returns over the long term. There are many different types of investments to consider, each with their own risks and rewards. Here are a few common investment options to consider. Stocks. Stocks are shares of ownership in a company and can potentially offer high returns over the long term. However, they can also be volatile and subject to market fluctuations. Stocks represent ownership in a company and can be bought and sold on stock exchanges. Investing in stocks can potentially provide high returns over the long term, but also comes with risks. Here are a few things to consider when investing in stocks. Risks. Stocks can be volatile and subject to market fluctuations. It's important to understand the risks involved and to invest in a diversified portfolio to mitigate risk. Research. Do your research on the companies you are considering investing in. Look at factors like their financial performance, industry trends, and management team. Time horizon. Stocks are generally considered a long-term investment, and it's important to have a time horizon of at least 5 to 10 years when investing in the stock market. Fees. Consider the fees associated with buying and selling stocks, including brokerage fees and commissions. Diversification. Invest in a diversified portfolio of stocks across different sectors and industries to mitigate risk and optimize returns over the long term. Overall, investing in stocks can be a potentially profitable investment strategy, but it's important to do your research and invest in a way that aligns with your personal financial goals and risk tolerance. Bonds. Bonds are debt securities issued by companies or governments and can provide a more stable return than stocks. However, they generally offer lower returns and may be subject to interest rate risk. Bonds are debt securities issued by companies or governments to borrow money from investors. Investing in bonds can be a way to earn a steady income stream and potentially provide more stability than stocks. Here are a few things to consider when investing in bonds. Risk. While bonds are generally considered less risky than stocks, they still carry some level of risk. Factors like credit risk and interest rate risk can impact the value of bonds. Yield. The yield, or the amount of income generated by the bond, is an important factor to consider when investing in bonds. High-yield bonds may offer greater income potential but also carry greater risk. Credit quality. Consider the credit quality of the bond issuer, as higher-rated bonds typically offer greater stability but lower returns. Time horizon. Bonds are generally considered a more short to medium-term investment, with most bonds maturing in 5 to 10 years. Fees. Consider the fees associated with buying and selling bonds, including brokerage fees and commissions. Diversification. Invest in a diversified portfolio of bonds across different sectors and industries to mitigate risk and optimize returns over the long term. Overall, investing in bonds can be a way to generate income and add stability to a portfolio, but it's important to understand the risks involved and invest in a way that aligns with your personal financial goals and risk tolerance. Mutual funds and ETFs. Mutual funds and exchange-traded funds, ETFs, are collections of stocks, bonds, and other assets that are managed by professional fund managers. They offer diversification and convenience, but may come with management fees. Mutual funds and exchange-traded funds, ETFs, are collections of stocks, bonds, and other assets that are managed by professional fund managers. They offer diversification and convenience, but may come with management fees. Here are a few things to consider when investing in mutual funds and ETFs. Diversification. Mutual funds and ETFs offer diversification by investing in a range of assets, which can help to mitigate risk and optimize returns over the long term. Management fees. Mutual funds and ETFs are managed by professionals, and typically charge management fees. Be sure to understand the fees associated with the fund and how they impact your overall returns. Types of funds. There are a wide variety of mutual funds and ETFs available, including those focused on stocks, bonds, commodities, and other assets. Consider the investment objectives and risks of the fund before investing. Time horizon. Mutual funds and ETFs can be a long-term investment, and it's important to have a time horizon of at least 5 to 10 years when investing in these types of funds. Risk. Mutual funds and ETFs are still subject to market fluctuations and risks associated with the underlying assets in the fund. Liquidity. Mutual funds and ETFs can typically be bought and sold on an exchange, providing liquidity for investors who need to access their funds. Overall, investing in mutual funds and ETFs can be a convenient way to diversify a portfolio and access professional management. It's important to understand the risks involved and invest in a way that aligns with your personal financial goals and risk tolerance. Real estate. Real estate can be a tangible and potentially profitable investment, whether through direct ownership or through real estate investment trusts, REITs. Real estate can be a tangible and potentially profitable investment, whether through direct ownership or through real estate investment trusts, REITs. Here are a few things to consider when investing in real estate. Types of real estate investments. There are many different ways to invest in real estate, including direct ownership of rental properties, real estate crowdfunding, REITs, and real estate mutual funds. Property management. If investing in rental properties, consider the responsibilities and costs of property management, including tenant screening, maintenance, and repairs. Location. Location is a key factor in real estate investment, as properties in desirable areas may appreciate in value more quickly. Financing. Consider the costs and risks associated with financing a real estate investment, including interest rates, down payments, and the potential for foreclosure. Liquidity. Real estate investments are generally less liquid than stocks or bonds, and may be difficult to sell quickly if needed. Diversification. Invest in a diversified portfolio of real estate investments across different sectors and locations to mitigate risk and optimize returns over the long term. Overall, investing in real estate can be a potentially profitable investment strategy, but it's important to understand the risks involved and invest in a way that aligns with your personal financial goals and risk tolerance. Real estate investments can provide income through rental income and appreciation in value over time, but may also require ongoing maintenance and management costs. Alternative investments. Alternative investments like commodities, hedge funds, and private equity can offer diversification and potentially high returns, but can also be complex and risky. Alternative investments are any investments that fall outside of traditional asset classes like stocks, bonds, and real estate. They can be more complex and less liquid than traditional investments, but may offer unique opportunities for diversification and potentially higher returns. Here are a few examples of alternative investments. Private equity. Investments in private companies that are not publicly traded. These investments are typically made by institutional investors or high net worth individuals. Hedge funds. Private investment funds that use a range of investment strategies to generate returns for investors, often using leverage and derivatives to amplify returns. Art and collectibles. Investments in valuable art, collectibles, and antiques. These investments can be highly subjective and may require specialized knowledge to evaluate. Commodities. Investments in physical goods like gold, oil, and agricultural products. These investments can be volatile and subject to supply and demand factors. Cryptocurrencies. Investments in digital assets like Bitcoin, Ethereum, and other cryptocurrencies. These investments are highly speculative and subject to market fluctuations. Venture capital. Investments in early-stage companies that are seeking funding to grow and scale their businesses. These investments are typically made by institutional investors or high-net-worth individuals. Overall, alternative investments can be a way to diversify a portfolio and potentially generate higher returns, but they also come with higher risk and may require specialized knowledge to evaluate. It's important to thoroughly research any alternative investment opportunity and consult with a financial advisor before investing. It's important to do your research and consult with a financial advisor to determine the best investment options for your personal goals and risk tolerance. Diversification across different asset classes can also help to mitigate risk and optimize returns over the long term. That is it for today's video. Please comment down below with your insights and ideas. To learn more about business, life, and technology, subscribe to this channel, and we'll see you on our next video.